Good morning, traders. Richard here doing a quick point and figure chart review of the S&P 500 Index. I've got the 50 by 3 high-low point and figure chart up here. This means for this current uptrend to reverse lower, the index needs to drop by 150 points. It's 50 by 3. So that will give us a clear indication when the current rally is over. The index recently met 5,400. A cluster of point and figure charts here between 5,300 and 5,400, and the next two major upside targets is 6,000 and 6,100. And then we can see, do you expect some form of a consolidation, because it's a pretty steep continuous move to the upside. Now if we just look at it from a Fibonacci extension and retracement point of view, now if we incorporate our Fibonacci analysis, we can see that this particular move from March 2020 to December 2021 did in fact retrace about a full 50% from Fibonacci retracement. You can see how these 23.6 and 38.2 all came key areas where support were tested, but the market did pull back significantly on that basis. Now if we look at this move from here to the 6,000 zone, because we think, well, maybe in terms of seasonality we can still get to 6,000. We're 6.5% away from that. You can see what a if we get a consolidation point of figure chart reversal in and around the upside targets here at around about 6,000, you can see that 23.6 and 38 as well as a 50% retracement brings us right back to, so it'll be interesting to see if this rally is going to continue, touch 6,000, then maybe consolidate back to 23 and 38, but these are the downside risk targets in and around this upside 6,000 upside point of figure chart reversal. Next up, we look at the S&P 500 from a 1% by 3 point and figure chart. It's basically a logarithmic scale chart, and we can see the market recently hit quite a couple of targets in this rally that moved higher. This whole cluster of targets between 4,854, 4,902, 5,000 to 5,100 were met. We then went on to meet 5,152, 5,309, and more recently we met 5,635, basically hit that target. The high was 5,635.39. So we're very close to that target, but I kind of assume we kind of already met the rounded figures. But so far we've met these three significant targets. The target higher after that is 5,692, so we're 1% away from that one, and then 3% away from 5,800. So these are the upside, immediate upside targets. I won't comment on that much longer term target up there. But we do expect some form of a consolidation in and around this cluster of targets. So do expect some form of a consolidation between 5.6 and 5.8, just to digest this move from this low year when the rally started back in October of 2020. Now if we just move in a little bit further out, so we're going to look at it from the Fibonacci retracement point of view from this low, and we say, let's say we're going to meet that 5,800 target roughly. And you can see that a 26 and 38% retracement brings us all the way back to 5,153. So that is the possibility if we get a sell-off in September and August and September to October, could retest these two lows of 5,153 and 4,784. So these are the downside risk consolidation support levels on this point and figure, but we'll look out for a point and figure chart reversal. When we're starting to get a reversal in and around these targets, that will signal the end of the current uptrend. As soon as the chart prints a 0 or an O there, it means that point and figure chart will then be going down. But so far, very strong rally, hitting upside targets, very close to the next two, 5,692 and 5,806, very close to those targets, and then do expect some form of a consolidation within this range. But watch out for those point and figure chart reversals to the downside. Until next time, happy point and figure chart trading. Bye for now.